Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel L. Connon, along with Brianna Valesky, and I have Nate Tobik on the line. He's an investor and founder of CompleteBankData.com. Nate, how you doing this morning?
Good, doing well. Thanks for having me on the show, Joel.
Yeah, you're. Are you out on the East Coast there? Are you hiding from the snow, or where are we speaking to you from today?
Yeah, I'm in Pittsburgh, and so I'm a big skier, so I love the snow, and this is like a second Christmas for me here.
Okay.
So
All right. That
yeah,
sounds good. All right. So we talked about a lot of things here on the show already with what's going on with the earnings season, but let's get down to a little bit of talking about the fundamentals because we talk about that's what ultimately moves the market. And we had a merger earlier in the week, and the Royal Bank of Canada, which has been on pressure lately, makes a purchase of CNY. What does that mean for the banking sector, and may there be some other acquisition targets out there?
right. So this is a big news, and so Royal Bank of Canada is purchasing City National. So this is the Royal Bank of Canada's second entry into the U.S. They tried back in 2001. They bought Centura Bank, and they didn't quite integrate it well. Didn't have a good experience. Ended up with a write down, and banks in Canada are restricted from mergers. So the only growth they're going to see is in the U.S. So they RBC came back. They looked at City National, and they put in an offer, and I believe it's about 2.7 times tangible common equity, about 2.3 or 2.4 times tangible book value. So this is much higher than any deal multiple we've seen, and it's actually the highest deal multiple since right before the financial crisis. So if that's any sort of a data point there, but what RBC sees in City National is the bank for, say, Hollywood and entertainment. So they have a branch in Las Vegas, Nashville, New York on Park Avenue, in Beverly Hills, LA. So they see a great name brand that could be used as a platform to build upon. And they're getting a good wealth management division in City National. And I think they're looking to restart in the US. I had seen an interview as well where RBC's CEO said that they'd like to expand into Texas, and they'd use their Canadian energy experience to expand into the US energy regions. The timing is a little off on that, as you know, with the way energy and oil has gone. So it could be argued that maybe RBC doesn't have the best timing in terms of deals, and they're looking to get into the U.S. energy market as energy falls. But this could work out well if they integrate it correctly.
Why doesn't Canada allow mergers? Within banks within Canada, is it just there's not enough of them? They don't want any monopolies. Is that the reason for it?
Yes, yeah. The Canadian banking market is I don't know offhand, but it's just a handful of big banks. So it would be, if the equivalent of if the US only had, say, like JP Morgan, Wells Fargo, Bank of America, and Citi, it's like you can't really merge beyond that without really monopolizing a market.
So who else is you look if the Canadian banks are on the prowl here. And they're looking at these other banks that get involved. I guess with the wealthy or with the stars. Any other stocks that may be on their radar?
Yeah, no, I don't. So we have a screen we like to run of potential acquisition targets, and these are banks that have they have average to a little bit below average operating metrics, and they have been really lagging the indexes in terms of return. So what you get there is some shareholder pressure to the executives and to the board saying you need to do something, you need to change your operations, or you need to just sell. And a lot of these end up do selling. So we have a couple names right off the top here would be like a First Tennessee National.
What's the
So
symbol
they're
on that one?
it's a FHN.
FHN. Okay, and that's relating to your Nashville theory, right? As far as going for different sectors of the U.S. economy.
Right, right. So Tennessee is Nashville's thriving. It's the city's doing well, so that's not a bad area to be. Another bank that's interesting and it's done very poorly is First Niagara Financial, FNFG. So their 5-year return is about -6% a
Ooh.
year. So investors are extremely frustrated here, and they just have kind of average to below average operations. They recently took a large write down, and they haven't shown that they could really turn things around. So at this point, maybe it's time to ask: Is First Niagara ready to sell to someone else and disappear like a lot of these other banks?
Okay, let's we got a question here coming out. I believe the bank in Nova Scotia here, just sitting on support here. I mean, Canada's been you know the oil crisis, has caused them to lower interest rates and whatnot. Is Bank in Nova Scotia? Do you think they may go on the acquisition prowl as well? And what do you think about on the support level that it's sitting on?
I was trying to pull up their chart real quick. The I don't know if they've been a big acquirer in the past, but these banks really are stretched for growth in Canada, and the Canadian Central Bank lowered the interest rate, so rates are coming down again. I think it was 25 basis points, and so that they can't get growth in Canada, and Canada is a very saturated market, so. It wouldn't be surprising if they start to look across the border, maybe in New England. One state that's extremely overbanked up there is Massachusetts, and Massachusetts has a number of small banks that that it might be time to sell, consolidate that market some, and that could also give a Canadian bank access to, say, Boston and that wealthier portion of New England.
Okay, let's shift gears here to from potential acquisition targets to bank earnings, and not very good so far. The financials have not really impressed Bank America. First of all, before I ask you about the individual, what do you think about that sell-off in Bank America from over 18 and change to under 15? Little bit overdone there.
The I probably so, but all banks. It was almost as if 20 we rolled over into 2015 and everyone decided this was the time to clear their banking names out of their portfolio. The Everything's down. The index is down, and it's been a big drop off, and I don't know what's changed since December. I would say nothing's changed, and so it's a little overdone.
Okay, and just your appraisal of the earnings so far coming from the financial sector.
Yeah, so the what we've seen is the big banks really are flat. Revenues dropped in a lot of cases. Wells Fargo was their income was up 2%, revenue up 4%, and most of the other ones flat or down. And I think what you're seeing is that these big banks have really hit a limit where it takes a lot to move the needle. So in a growing economy, when they have a tailwind behind them, they're going to be able to do extremely well. But when the economy's slowing down, or it's really tough to find that growth. Now, contrast that to the regional banks, which actually have had a number of earnings surprises, and PNC was up a few percent in earnings surprise. A couple other regional banks were, and they're able to find growth because they're working with a smaller geographic base, and it's a lot more manageable. The numbers are smaller, and so finding an area that's healthy and growing is able to move the needle for earnings on these banks. Whereas a Bank of America, they're dealing with so much, and then you also have the lawsuits, and there's some regulatory headwinds, and that really holding them back.
Okay, we did a Fed forecast at the end of the year last year and had a lot of guests on discussing the potential for a rise in interest rates and came up with some different opinions. But what's your outlook? I mean, the Fed funds rate are indicating, some kind of move by, the middle of the year, or October. Some people are saying, interest rates are never going up again because it will totally stifle the economy. How you sitting on the interest rate outlook for the remainder of the year?
I I don't think they're going to move, and I think that's because the Fed is very cautious, and so they're upset. They're worried about doing anything that might upset the economy. And I think what they're going to do is they're going to be slow, and they're going to wait until everything is doing extremely well. All the numbers have recovered beyond what they should have before they finally act. And so when rates do rise, they don't stifle the economy, and that could have some risks. There could be some risks related to that, and but I don't think they're going to change. And so banks that have been very flexible and have found a way to adapt to this environment are doing well. Some banks like I said, we have earnings surprises and doing very well. And then there's this other group of banks, and it all you hear in the transcripts and in their conference calls is once rates rise, we'll finally make money. Once rates rise. And the problem is we don't know when rates are going to rise. It might be 2 months, 6 months, 3 years, and you need to adjust to this environment. And so I think when you see a bank executive who keeps saying, when rates rise, we'll finally make money, it's really saying, what he's really saying is, we're not flexible, we're not very innovative, we haven't found a way to make money in this new environment. And I would stick with banks that have found a way to adjust.
And where who would you put in that category?
So a lot of the regional banks definitely have found a way to adjust and play in this new environment. A lot of the small banks, that some of these, probably too illiquid and don't trade enough for your listeners. That's where you see a lot of the maybe old fashioned kind of stick in the mud. We're just waiting until we get to 5 or 6% rates, and then we're going to be making money hand over fist. And those guys are going to be waiting forever, and they're eventually just going to be bought out.
Okay, any of the more liquid, regionals that you would mention?
I don't have anything offhand. I would say that if someone's looking for a place to enter into an investment into banks, I would say the regional banks are really that's a really good area of the market to be in. So these banks they're doing well. They're not too big. They don't have most of them don't have the regulatory burden that you have at the really big banks. So if you get to over 50 billion in assets, you have to have a living will. So we saw recently Wells Fargo is the only big bank to have their living will approved. So they could now fail successfully, I guess you could say. But the regionals aren't dealing with those sort of pressures. So they could grow, they could still acquire other smaller banks, and those acquisitions are definitely going to be they're going to help earnings, whereas big banks can't really acquire much anymore. They've kind of grown to their limit, and so I really think the growth is in regional banks. So you have like a PNC, Fifth Third Bank, SunTrust, Zions.
There's a lot of them out there.
there
Okay,
there
Nate,
are a
we
lot.
got to
Yes.
get to the open here. The market's completely falling apart. We've been on the line with Nate Tobik. He's an investor and founder of CompleteBankData.com. He joins us here on the show discussing his outlook for the banking sector. Nate, thanks a lot for coming on, and we'll talk to you again soon.
All right. Thank you very much for having me.